All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market opening up here this morning, and definitely on the downside here, as the market, trying to deal with all the drama, the trade war drama, what that means, and how that is going to unfold and play out. And yesterday we get this bump up right here as White House spokesman talks positive. Then we get Trump, last night talking differently, and it's he said, she said. Do they love me? Do they love me not? Type of a situation. And we've seen these before in the market, and when uncertainty is created, the path of least resistance is lower. And that's what we are seeing out there today and here this week. And, we've seen the market vibe turn bearish and everything else. But let's get off and rolling here with the 100K challenge. I'm bringing the spreadsheet over, and again, all trades are going to be made at this time of day in the morning and at 2:30 Eastern in the afternoon. That's the only time that trades are going to happen, and they're only going to happen on signals or when one of these elements, exit elements, come into play. For those of you new with us, welcome. Great to have you aboard. If you want to find out more information on some of these various things, you can just click the video discussions here, and it will take you to some explanation there with each of those elements. Excuse me. But anyway, let's get started. Entry triggers this morning. None. There were none this morning. I'll show you some that are close, but nothing here this morning. There's some really close ones that could trigger by this afternoon, but nothing to go out and trade right here in this AM session. I always like to get a challenge started off with the trade, but if there's not a signal, I can't go with it. But I'll show you, some of the stuff that is coming. When a trade is made, it will be populated here into the trade tab, and then all the recordings will be posted in here as well. So you don't have to go dig back through the archives to find them. Now, with this, the link for this spreadsheet will be in the live feed each day. And it will change. The link will change from time to time from a security standpoint, but you'll be able to access that each day from the tab there on the feed, and we will also send out all trades live, real time via text, tweet, and email. So anyway, that's what is going on there with that. But this watch list here, this watch list is a little bit expanded compared to what it was when on the test. Okay, and I expanded it for a very specific reason, and that is just to increase slightly the number of potential signals. But you'll see some of the stocks that have added here. Triple D, Chipotle, Mexican Grill, Twilio, Whirlpool, Vulcan Materials, Alcoa, Alconic, EOG, Amazon, CSX, and Verizon. These are not all stocks that I'll be able to trade on every signal. Why? Because sometimes the options are just insane. When it comes down to it, I can't trade Amazon for the first trade of a challenge with how the options are priced. Just with where the stock is, it's just too much of an allocation of money. But as we go forward here with the challenge, that will obviously change. There are some like Triple D where just sometimes the spreads are just ridiculous. So not very entry friendly there with that. Okay, but let's come in here to the watch list because I want to show you, kind of. We talk about this element of what it would take for something to trigger and what would kind of have to happen. Well, let's just kind of scroll through these because we saw, and we talked about last week, we saw a lot of stocks with their stochastics 39.1. And, that's what I'm going to focus on here on this video is this Stoke 39.1. And when it's above 50, generally the stock is in a more bullish position. When it's below 50, generally the stock is in a more bearish position. Now, this Stoke 39.1 is not in the algorithm for the challenge trades, but it is one of the best ways to visually show whether a stock has a potential to trigger or not. And the reality is stocks that are below 50 on the Stoke 39-1, they have a greater chance to trigger bearish. Stocks above 50 have a greater chance to trigger bullish. A lot of the signals that we'll see will happen, as this is changing, but that isn't always the case, and we saw that in the test. That wasn't the case. Here's Alcoa. Now we've been talking about Alcoa. We showed Alcoa right back here off of this support. Talked about the lower highs. This is going down to new lows, and there we are today, hitting into new lows. This is not a fresh, new, emerging trend. This has been one ongoing and happening. So not something that's giving a fresh, new entry trigger here today, but definitely a downward trend. Here's American Airlines. This is one of the stocks on the watch list where the 39-1 is still over 50. We have several of these, but keep an eye on American. The lows or the highs continue to get lower, and this is something that we could see some sort of breakdown come into play on. It was almost a signal this morning, and I said, rarely will we get signals, with the Stoke 39-1 up here, and I stand by that because rarely it will happen. But this one, very, very close in all the other parameters there, and actually could trigger by the close today. You'll notice Apple, starting to make a little bit of shift, starting to make a little bit of change here. But, coming off of higher highs, higher lows, right? This is the initial sell. Generally, you'll get a rally back and then, a further sell. But we are starting to see a little shifting action going on there. Amazon has held up very well. You'll notice 39-1 still up here above 80. Most of the stocks where the 39-1 is above 80, most of those stocks are reserved for, consumer staples. Your Procter & Gamble's of the world, which you'll see here shortly. But if you're looking for stocks that have a potential to trigger bullish in the near future, and I'm not talking today, but if there's a quick, fast rebound to things, Amazon's one of those that could trigger fairly quickly. Arconic here as well. This one has held up extremely well as investors have sold Alcoa. They've bought Arconic, and there's some buyout talk when it comes to Arconic, and that is helping to drive it. We have Boeing, which turned bearish back here in March, and it's had some rallies, but it has been definitely all bears on deck here with Boeing. Not a fresh new trend emerging. This one's been happening. Here's Alibaba. Now Alibaba had this beautiful breakout. Here we go. It's off to the races. Oh no, Trump tweet. Bye. And we've seen this with a lot of Chinese names. And you can see the Stoke 39-1 pushing below 50. And this is a stock that's in some serious trouble and serious risk of the 140, 150 level coming in if there's not a trade war resolution or trade dispute resolution, whatever you want to call it. Here's Bank of America. In fact, Bank of America is on the lower Bollinger Band today, which is really interesting here this morning. But you can see where the 39-1 is. This is one where if we start to see a rebound, has a much greater chance of triggering bullish than something like an Alibaba, whose 39-1 is breaking on down. We have a Bristol Myers, which is kind of just, this one always kind of beats to its own drum, but nothing really in it. We have Caterpillar. We talked about how Caterpillar stripes were changing, and we have seen Caterpillar absolutely get rolled on and wrecked. Caterpillar signaled last week, and I talked about the trade and the trade setup there, but not a fresh new good risk reward setup right where it sits right now. And as I go through these, there are a few like Chipotle, right, have nothing to do with the market. Right, just zero to do with the overall market. Yeah, a few bucks here and there, it's going to fall because of the market, but generally holding up very well. While things like ConocoPhillips, these broke down before the market started selling this week. Right, ConocoPhillips had a worse week last week than it has so far this week. and this trend is pretty mature here. No fresh new signal there with it. We're starting to see some stripes change in a CSX. This is a big one. We start to see the rails give up in this market. There's some serious trouble. This one's close to a bear signal, but not quite there. Still, coming off of a higher high, right? Just set a new high on Friday, so needs to set a little bit of a lower high element there. We have Chevron news-based here this morning. Not too bad. They don't have to buy Occidental, and they get a $1 billion check for it. So, not too shabby of a deal for Chevron. But there are some fears that Chevron's going to go out and try to buy somebody else, and that'll probably keep investors at bay for a little bit. But this one here has that kind of 3-7 upside crossover action on it. Has some higher lows starting to come into it. But you can see the 39.1. It's going to be very hard to trigger bullish with it down here around 20. There was Chevron. Delta, like American Airlines, has held up very well, right? These have also benefited a little bit from oil selling off. Triple D. Now, this is one I've just added to the watch list, and is one that probably won't trigger for a few weeks. With the action that it had yesterday, that big gap, there does need to be a little bit of a reset. But this is a stock that we may be talking about bankruptcy by the end of the year when it comes to Triple D, and that is something that. Chasing it right here is not a great risk reward, but there's some serious trouble in paradise there. Now Disney, and I'm going to pause here for a little bit because you can see Disney 39.1, well in bullish area, had earnings overnight or last night. The earnings were pretty good. But when we look at what the expectations were going in, it was probably one of the highest expectations for Disney that Disney has had in many, many years. And rightfully so, after the investor day and the reaction, big up move. And now, the options are just absolutely getting torn apart and squeezed. And the IV is getting crushed here on them, albeit not to the same degree as normal because of the overall market. But you can see this one's, nowhere close to triggering bearish. But definitely needs a little bit of reset time after the earnings and after the investor day there with it. EOG Resources, this is one of those stocks that has pushed back below 50 here recently. Says path to least resistance is lower. Now this has had a little bit of a rally over the last few days, right? This is something where if we start to see a lower high come in, could trigger bearish. It's not going to trigger bullish here because we're not talking about a higher low in play here with it. But we're starting to see things like Facebook, which has held up really well. But we're starting to see some weakness come in, but this is kind of like that Bank of America. We start to see things turn around. Facebook, Bank of America, Amazon, they're going to be the quickest to trigger based on what these sell-offs have been in the stocks, or basically what the sell-offs haven't been. Here's FCX. We talked about FCX back here when it broke below 50, and it was just changing its stripes, and it has been nothing but downhill. FCX, Alcoa, kind of in that same boat here. FedEx, I don't know if there's anything more I can say about FedEx that I haven't said in the past month. This to me is a $120, $130 stock, masquerading as a $180 to $200 stock, and path of least resistance is lower. We're finally seeing the Stoke 39.1 push back below 50 here after this kind of low volume, ridiculous April rally, and that rally has been completely erased. We talked about back here the fresh kind of trigger in it, and I showed you the play that I made here on it. I did get out of it. I am out of it here. Got out of it on Tuesday. But, no fresh signal here. We'd need to see a little bit of a rebound to get some sort of fresh signal. I would love to trade FedEx for the challenge early on. Here's gold. Now, my stance on gold. I'm very bullish on gold longer term. Now, gold is not a type of commodity or not the same thing that it used to be. Gold is not going to surge higher because the market goes down. right? In fact, if you look at January and February, gold pushed on higher as the markets went up, right? This is no longer a super fear trade. It could turn into that if things get really bad. But, this is something where we are seeing it push back above its short-term major moving averages here this week. But we're not coming off of a high or low here yet. So, we're still talking about being mired in this little kind of mini bearish pattern here. And the risk of, one more sell or, a little bit lower still in play there with it. But definitely closer than it's been in a while to a potential bullish signal. Gold miners, we saw Barrick try to kick on up yesterday. Talked about it. We don't have it above 50, so chances of getting a bullish signal very slim. And we see it, still below 50 here, and really just not being able to get much of a buy come in to it here of late. Halliburton just has been railroaded, just absolutely taken to the woodshed here, and deservedly so. Deservedly so when you look at the numbers. Home Depot breaking on down, looking to break below 50. Now, we do have Home Depot earnings up and coming here, so not something I could play for the challenge on a signal here just yet, since not holding earnings plays here in the early part. Honeywell, probably one of the best earners out there in the market this quarter. Is holding up, but starting to show a few cracks, but nothing close to a signal there. IBM, I mentioned this on Tuesday morning. It triggered bearish on Tuesday morning. Continues to be bearish, continues to push on down here with it, but not a fresh new signal here today with the signal that came in Thursday. Intel just, this is one ugly move for Intel, and if you're an Intel investor and you're looking and you're going, man, for the year I'm flat on a tech stock with tech doing so well this year, doesn't feel very good. Doesn't feel very good at all. We're seeing things like JD change their stripes, pushing below 50 here, just kind of that Alibaba type element to it. We're starting to see J&J start to break down, but coming off of a higher high. You'll see above 50 on the Stokes, so not quite there. But you kind of see what I'm getting at. And we can go through the entire watch list and do the same thing. We see some things like Juniper starting to change its stripes. Things like JP Morgan. No, it's just kind of a normalized pullback. Some of the consumer staples holding up pretty well. I'm very interested to see how these casinos do, how they hold up here, maybe even on the next little rally, especially with the trade war stuff. Talk, MGM has definitely been a laggard within the group. Then Triple M, which I debated taking off the watch list just simply because it's going to be a long time to trigger after this move. And we talked about this after earnings, and that this was an earnings disaster. And we talked about the play. You short Triple M, you buy Honeywell, and you forget about which way the market goes. Or you buy UTX, right? And you just play Triple M lagging those stocks. And Triple M has lagged those stocks in a huge way. I think it's like 8% already since the earnings date. And to get an 8% move like that so quickly is very, very difficult and very unusual. But we do see that playing out. Altria definitely in a bearish mode here. Microsoft could change. Microsoft's one of those, and we talked about, if Microsoft's not able to hold its gains from the earnings, market's in trouble. And market's in trouble, right? Market is absolutely in trouble right here, in every way, shape, and form. Micron triggered earlier this week, as I mentioned. Still running on its bearish mode. Now, Netflix. This one is one that you can see it pushing below 50 here today on the Stoke 39.1. So starting to change its stripes. I thought it might have a chance to trigger this morning, but it is coming off of a higher high, and that is one element that just aren't going to see very often in the algorithm. You're not going to see bear signals on things coming off of higher highs very often. Nike has absolutely changed its stripes. here in terms of from bullish to bearish. Pepsi holding up very well. Throw this in the Bank of America category, the Facebook category, as far as stocks that if we start to see a bounce or a turnaround, could be very buyable very quickly here with it. Procter and Gamble as well. But anyway, you get the point. I won't keep belaboring the point here, but it's one where we have a lot of stocks that are changing their stripes and going from major bullish trends to showing major bearish breakdowns. And now it's a matter of, okay, do we get some sort of short-term signal to trade them? Twilio, sorry, I kept scrolling down to get to Twilio. This is one that could trigger this afternoon. We have all the elements in place. You can see it pushing below 50 here. That's a little more coincidental. But Twilio would need to close near its lows on the day to constitute a trigger here with that. So that one is one of the closest in terms of fresh new setups. Another very close one is Under Armour, which could trigger by the close here today, and may be the first challenge trade. Here's Visa. Visa looking kind of searching for that 50 mark. There's been a pretty decent pullback for Visa. We've talked about it. This is one of the best out there. You just don't find many better stocks long-term fundamentally, and one that is going to hit new highs eventually, but it is not immune to a pullback in the market. Right now it's in pullback mode, but no real fresh trigger as it's coming off of a brand new high there. So anyway, that's the watch list where some things are here with it. Some of the stocks that are close to setting up some triggers here. In the as we go forward here with it. So anyway, just there was one other. Here's Walmart. Wanted to show this one looking to change its stripes, lower highs coming into play. Now it does have earnings upcoming, so do have to be aware of that. But we do see a little shift there in Walmart. All right, so that's the watch list. Just a quick run through here of that, where things sit. And remember, this challenge is going to be based off of the triggers that come in and run and execute it with that. It's not going to be based off of what's going to happen right here, right now, and everything else. That's we're going back a little bit back to the roots there with it. Now earlier today I was asked about corporate bonds, and as I looked at some of the market news out there, I noticed a couple big-time investors talking about corporate bonds and talking about the pain to come in corporate bonds. And they're right. If the market pulls back, corporate bonds are in trouble. Corporate bonds will get rocked, and they'll get rocked in a big way. But one of the things you'll notice is that when the market bottomed and really shot up, corporate bonds actually bottomed before equities, and you'll notice how much so the magnitude in which they rallied relative to equities. These have a tendency to be a little bit of a leader. One of my concerns for the market in terms of, all out bearishness is, do we see a rebound in equities in the short run? Why? Because corporate bonds really aren't selling off all that much. Corporate bonds are holding up very, very well in this, during this week, right? They're not this kind of disaster train wreck that many are kind of looking for here with it. Now, if that changes, obviously, we have the negative divergence and the momentum oscillators, everything else. We're piercing the lower band. We have trend rider bear components associated with this. But how do you trade it, right? If you want to trade it lower, how do you trade it? Well, let's go take a look. And here are the options for HYG, high-yield corporate bonds. And you'll notice on the May, you'll notice the spreads. 34 to 43 cents. It's a huge spread. These spreads are ridiculous. You say, well, why are they ridiculous? They should be really good because, well, look at the open interest. I mean, there's a ton of open interest on these. You're right. There's a ton of open interest, but these are things that are set up mostly by investors. They're set up to to hedge things, and they're bought in big blocks, right? So if I come out to June and we look at some of the open interest, we look at some of the volume, 14,000 volume. This is something that is most likely a big block trade that came in. So if I come in and just pull up the volume, yeah, you can see here in 1 minute there were 8,000 of these. In the next minute, 12,500. Right, so they're not all these little transactions, these microtransactions, causing this. These are big block trades from huge investors that are using this for hedging, that are using this for other purposes other than directional trading, right? So the spreads are going to be very high. Almost all of these are limit order-esque. You have to trade them with limit orders. But if you come out and you look at something like August, and you come out here on the put side, if you can get a decent fill on a spread, great. But it is something where you look at the $80 put. Let's say you get it for 30 cents. Well, to go down to 80 in 3 months, 80 is down here. This is something, it's 85 right now, but it has to tank to get all the way down there. This is not something that moves by integers, moves 85 to 82 very quickly. When we do see it happen, it's a big deal. We did see it happen a little bit back here December, January. But most of the time, that is not the case. So this is something where you have to decide, okay, how do you want to trade it? For me, when I come and trade something like the HYG, I'm not looking for a short-term trade. I'm looking for an investment or a hedge or something of that nature. And generally, I will just not even go near the out of the monies, right? I don't want anything to do with out of the money on this, but I'll normally give myself plenty of time, and I'll go in the money. And I'll say, okay, you know what? Instead of shorting this at $85, I'll come in and buy some puts here for $9. All right, these puts, 93 puts, are worth $8. So, all right, it's going to cost me, 12% here in terms of, premium on my option. And I trade it with something deep in the money. Now, that doesn't give me the massive leverage, but it gives me a way to play it without having to worry about the spread, with it being able to kind of have a very stock-esque type of trade without all the capital outlaid for it. Occasionally, and I don't do it very often, in fact, I haven't done it in a number of years, we'll come in and look for some sort of put spread, but you've got to get a good fill. And it's one of those things where, with the spreads, you kind of have to guess on the fills. So you come in, you take something like this 83-85 put spread. You come in and say, well, this is kind of 270. The 83 was $2, so that's probably around 70 cents. So I go and put a limit order in to buy that put spread for 40 cents and let it sit for an hour. And then I'd up it up to 42 cents and let it sit for an hour. If it fills me, great. If it doesn't, fine. I'll bump it up, and I decide what am I willing to pay. So I'm only willing to pay 60 cents. Okay, I'll bump it up until I get to 60 cents. If they don't fill me there, I'm out. I'm not going to fill at a higher price. Not going to fill at market. Market, I will take a bath here. But I have to get a good price. I have to get a very good price. Why? Because I'm going to have the same issue getting out, right? And so it's one of those. It doesn't have a ton of instant, instant, and liquidity isn't the word, but instant tradability. There's plenty of liquidity, right? But when you come into actual corporate bonds, that's where liquidity dries up. That's where there's not a ton of liquidity, and why you can see some big knee-jerk reactions when it comes down to them. Okay, so anyway, that's a couple thoughts there on HYG corporate bonds and how they are trading here. Okay. Earlier this week, I mentioned, yesterday I mentioned this 2,900 level on the market on S&P futures, and that if you're looking to short yesterday, let the market come up near this level. We saw that happen, came up near that level, and it's sold off from that level. We are starting to hit a little bit of short-term oversold territory, right? And historically, when markets get choppy like this, short-term oversold means one of two things: means there's a nice bounce coming, or there's a huge drop coming. One of the two. And so far, there are no signs of bounce. What do I mean? There is no bottoming volume. The volume this morning is heavy. The volume this morning on the market is very heavy. But we have not seen any indication of bottoming volume. Nothing in the 18 to 24,000 area in 1 minute. So there's nothing here, even though the market's oversold, to say, hey, you know what, go buy it right here. Could we possibly get it? We could, right? But it is not here yet. It is not, no indication of it coming in here just yet. This is still all sellers on deck, and the market just being ruled here by the sellers. We do have the Chinese delegation, which is coming here to the U.S. today to meet with U.S. officials. But you see the tweet out of China last night, or out of the one of the news execs in China last night, basically saying the only reason some of the negotiators from China are coming is because they were invited, not because they really expect anything's going to happen. And the market is absolutely pricing in that the tariffs are going to take place. And if you look at Trump's comments, it does look inevitable that those tariffs are coming into play. I know we keep hearing, the propaganda of all the prosperity that is out there. But let's face it, we're in an economy that's growing at a fragile 2%. We're in an economy whose, job element or labor element is very strong. But is one of those things where the other elements are weakening, and they're weakening here after a little bit of March bounce, especially in manufacturing, and we're seeing that same trend around the world. So the market's going to have to wrestle with that. The market has been able to say, hey, you know what, who cares? We have this wild card here, but the market's going to have to wrestle with it, and we are definitely going to see volatility increasing and pushing up here as we go forward, and absolutely looking forward to it. Much better than flat, much better than non-movement types of days. Earlier this week, talked about day trading elements, some ways to apply some day trading to this type of market. It works very well in this type of environment, so feel free to go and check that out. Those are in the archives there. And, very simple, just using a simple Bollinger Band and a simple moving average. And, definitely, allows you to ride some of these moves, like this 10-point move that happened in, 15 minutes right here, where, I can't do something like that for the challenge, with, sending alerts out. Other people have to follow, things like that. But, definitely effective there when the market is volatile or increasing in volatility like it is right now. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.